Andrew, do you worry about this complacency in the market?
I do. I mean, I think it might be a little bit too much to say the market is completely complacent. I think people are aware of some of these uncertainties, but you certainly don't see much premium priced into options markets or volatility markets. You have an S&P that's within a couple of % of an all-time high, and I think generally the view of a lot of investors is that these tensions will just resolve themselves. The Brexit will just work out. Trade will just work out. So we are concerned, especially heading into an August-September period that tends to be weaker for markets, tends to historically be more volatile.
Right, but it could also be as volatile and not even more volatile than what we saw in February. So what kind of positions do you take?
Yeah, sure. So look, I think it makes sense to be long vol in a number of different asset classes. That's something we like. We like looking at protection strategies in small cap U.S. equities. We think those look extended. We think those are vulnerable because people have piled in on the view that they're immune to trade, and we don't necessarily agree. I think showing some cautious on U.S. tech still, given how well owned we think it is. And I think it's hard for the market to go down if you don't see tech weakness. And I think being cautious on U.S. credit, maybe transitioning into some of the emerging market fixed income markets that have priced in more risk premium.
What's the question you get most by clients? I mean, are they worried about trade, or are they worried about a repricing in bonds?
I think it's on the bond side, right? I think Morgan Stanley, we're at a consensus in expecting the 10-year yield to be lower in 12 months' time. Most people expect it to be higher. I think that's directly related to a view that we think U.S. growth will be somewhat slower than the consensus. We think that Fed tightening, the market will see through that, and will ultimately, the 10-year rate will say, look, this Fed tightening will ultimately lead to slower growth and tighter financial conditions. But I'd say that's still something that we get quite a bit of disagreement on. I'd say most investors are still expecting the 10-year rate to be considerably higher than we think it will be.